This 15 minutes could be the most important of your entire week, whether you're someone that's going through the crypto market half-assed right now, or maybe you're someone who's paying close attention and you're kind of confused on whether you should take advantage of this dip or whether you should wait for a pump up soon and expect a 30% crash like everyone keeps asking. Well, we're going to weigh up these situations today and see what the optimal choice is for us. Now, I've already gone ahead and made my choice based on the best risk and reward outcome. And so far, we've been pretty spot on in terms of what we should be doing in terms of risk and reward. So this is going to be a crucial video for you. And again, if you are someone not really taking this seriously, I'm telling you right now, we may not get a chance to buy altcoins this cheap again. And as you should all know, the purpose behind my content is to make sure you are more educated than what you were before coming into the video. So if you learn something new, help support the channel with a like on this video. And importantly, subscribe so you can achieve your crypto goals. I want you to pay attention to these dotted purple lines above. They just simply represent the previous all-time highs for Bitcoin each and every single cycle. So back over here, we had the 2014, 2017, and the more recent 2021 all-time high for Bitcoin. And when we chart them across, and by the way, this isn't groundbreaking news, a lot of people do know this, we obviously have resistance at this point in time. Note back here in 2017, if I zoom into this point, we noticed that we moved sideways for 54 days before pushing to the upside in a massive leg up, basically 143% or a 2.5x, which was about a month and a half time as well before we came down over about a month or so, 35%, which pushed altcoins down, 50% or more respectively. If we then come back out and zoom into this point in time, the same thing happened. It happened much faster. Once we touched this all-time high, we moved sideways once we built enough steam for 26 days, about just under a 2.5x, followed by a slightly less impressive crash at about 27%. Again, pushing altcoins down quite extensively. Now, if we of course zoom into where we are in the current cycle, it doesn't take a genius to realize that what we are doing right now is building enough steam, not just in Bitcoin, but altcoins as well, to have that first leg up. So if I zoom out again, you can simply see that from this point, that first massive, you could almost say a blow-off top moment occurs. And so if we just base what is happening next on history, which is our best friend, we can expect to move from the point we touched over here early this month in March, over sideways, minimum I'd say 20 days, to about a month and a half, so around the time of the Bitcoin halving here in mid-April, and then eventually pushing up about 100 or so percent, maybe even a little bit more, which would land us exactly on $150,000 Bitcoin, which happens to be a lot of people's prediction. That would then be followed, of course, by a sizable correction, which is what a lot of these people are speculating will happen, and for good reason. It's obviously happened many times before, anywhere from about 15 to a 30% crashes likely on the cards. And so a lot of people I'm finding are waiting for this to happen. They're holding more cash than crypto right now because they just in their mind believe that, even their altcoins falling down 50, 60% is going to be sizable enough to get in, and then for the final push to the upside, they're going to, of course, make their money in that period. But does this actually make sense? Well, I don't think so, which is going to be one of the two reasons why I have gone more in crypto right now than out. It's because buying altcoins at a 20 to 50, maybe 60% discount, if we do that after we move up, after this first leg, well, is it going to give you the price you really want to get in at? Well, actually, the math works out to be the answer as no, because if we have a look at Fetch, for example, over here, after this first push up, let's just say Fetch 3Xs from the current price of $250 to $750. Now we have that 50% correction. Again, that's if we have that correction. It might not be as substantial as people might assume. You can buy Fetch for $375, so it's actually better off you buying Fetch on this dip than waiting for the much larger dip, because again, between now and then, we have substantial upside. So that comes down to the question of, is it just simply worth speculating now rather than speculating later? Well, I don't really think that we can definitively say that Fetch or any altcoin will 2 to 3x in that period of time, and it might not go as low as 50%. Maybe it'll go up to 70% retracement. Who really knows for sure? And that's sort of what I'm saying here. Are you willing to put that risk on the table, or just take your chances and hedge with the market? We know it's going to be going up here soon, whether the crash is as severe or not. I think if your entry levels are perfect right now, it just makes sense to go in. But it's not just this theory that I'm kind of playing into and, judging my buys right now from. It's also the lengthening cycle theory as well. Now, not to continue on explaining this and as much depth as I have in the past, I've explained this about 3 times recently. I do want to at least mention it for those who haven't heard of it. Basically, what we're finding is every single crypto cycle from the very, very trough at the bottom over here to the very top, it lengthens, okay? So the period of time from these 2 points is expanding. Very first cycle was about 300 days. The next cycle was about 750 days. Then the 2018 cycle was 1,050 days. Interestingly, the last cycle, so 2021, we had again 1,050 days, which kind of stopped this lengthening cycle theory from happening. But if you consider the fact that maybe we will push into an early bear market over here, actually the theory still is possibly playing out. Now, before I continue, everyone's sort of shaking their head right now thinking, oh, this is some sort of fairy tale. I'm not going to really bother listening to this part of the video. Well, what if I'm right? What if the guy that introduced me to this theory, Credible Crypto, is right? And what if you're wrong? What if this 30% crash that I'm kind of leading into here, that you all might be speculating on to buy your altcoins apparently cheaper than today's price, what if that is the beginning of the end of this lengthening cycle? What if we fall into a bear market, you buy that dip, again, maybe you're pretty pissed off that you're buying more expensively than today, and then boom, we crash into a bear market. I mean, are you willing again to play that risky game? Let me continue on here and I'll kind of circle back to both of these scenarios and give you my final thoughts. We were supposed to, again, theoretically speaking, fall at a $30,000 to $40,000 Bitcoin. So in this range where we were trading, that was all planned and expected. Everyone's saying we were going to hit $100,000 Bitcoin on this second leg. Credible Crypto, the guy that again introduced this theory, was telling everyone, no, we're supposed to have what's called a correction wave, which is this third wave here, before that final, what's called impulse wave, this fifth wave here, to that upside, anywhere between a $100,000 to $150,000 Bitcoin. He was expecting this to happen based on this lengthening cycle, okay? However, at this point in time, well, guess what happened? Celsius, FTX, the US banking debacle, all these sort of things actually played out, which pushed us into what possibly could have been an early bear market. Again, this is all possibly. The thing is, though, this actually isn't invalidated either, because those who are familiar with the Elliott wave theory knows that if this fourth correction wave goes underneath that first impulse wave, that first push up, it invalidates the entire theory. But that never happened. We got close by a couple $1,000s, but we didn't fall beneath it. So this could very well be that final and fifth impulse wave to the upside, which again could land us what is suspected to be around, again, that $150,000 Bitcoin price. So for those scratching your head, what I'm recapping here and saying is, if we move sideways and then we push up, which is again what we're expecting, it's obviously something that happens every single cycle. We push up and up from that point in time after the all-time high. But what if we come down, everyone's going to start buying at these levels, and then bang, fake out, everyone's happy before that bear market continues. So these are the things we have to, of course, consider in addition to just simply having your altcoins at possibly a cheaper price than what that dip would even give us anyway. All in all, as a risk to reward, and that's how I like to play the markets, you and I are not smarter than the whales who can manipulate the markets. We are not smarter than the guys who do this, trading, for example, as their full-time job, who do investing in these sort of things as their full-time job. A lot of my day is consumed with YouTube. We're not smarter than these people, right? So why are you trying to take on more risk than you actually do perceive? I believe 80% or more actually in the market right now is the way to go. Previously, it was 70%. Obviously, as we've moved into the current situation, I'm putting more in crypto. Again, this is not financial advice, by the way. And I think still having some cash on the side is a smart move to make. Now, an additional reason why being more in right now is smarter than being more out, or at least being substantially in is good, is that the more you're in, or at least the earlier you buy, the less chance you get hit with capital gains tax, which is just an additional tax levy you are charged on top of the existing tax system you may possibly have in your country. I can't speak for everyone here, but for us, you get charged a substantial amount more for selling an asset within 12 months. A lot of other countries have the same thing, but it varies based on the percentages. Either way, you're basically charged more for selling within 12 months. So the earlier you get your positions in, so long as you're at or under your buy levels, makes the most amount of sense. Again, you pair that with the fact that this first leg up is likely not going to give you an optimal buy price even after the crash, and also that lengthening cycle theory could be followed by a bear market. I mean, guys, it's stacking up against us at this point. It's much better non-financially to be in, but still having some cash is, I think, a good idea, right? You can dollar cost average on the way up if we have some smaller dips, which is, again, likely to happen in this first leg. You can buy more altcoins. There's plenty launching soon, really quality ones at that. And you can speculate on some smaller caps that have, you know, some instant 2, 5, whatever X potential. As for myself, well, I'm holding only about 5% cash right now. I wasn't going to buy, but after realizing this, I went in, 95% in, 5% out. I mean, it is what it is. I wouldn't recommend you guys copy me. I mean, again, take this information on board and make your own judgment. So think about it for a second. I mean, I'm not trying to tell you what to do here. I'm just trying to give you a situation where you take all these variables and then you put it into that risk and reward. Now, if you are someone looking to maybe want to buy some of your altcoins and you are thinking to yourself, well, the prices are so inflated right now that even though we are on a nice little dip over here, and yes, prices have started correcting since I was buying earlier in the day, I still think a lot of these coins are at good prices. But you might be going to yourself, well, I, for example, maybe bought Render at $2, and Render right now is at $11. I can't buy any more Render. Well, that's actually a mistake, because the altcoins that you specifically have bought quite low on that are at an expensive price right now, these are an easy way for you to continue adding to these positions so long as the average buy-in price doesn't exceed the price you're willing to gain on the top side to get out of the project, if that makes sense. There's a way in which you can easily and risk-free continue to build your position in crypto. Here's what I mean. If you're asking yourself, oh, look at all these altcoins, what one do I buy? They're all well and truly above the ideal price. I've got Render, Fetch, ICP at those low prices. I don't want to add more because it'll increase my average. What do? Well, here's what I would do, and what I have been doing, particularly for a few coins: Near Protocol, Hedera HBAR, Quant, and Mina. I go in there every single time before I look to buy more of the tokens, and I think to myself, okay, so if I buy more of the token, what is my average buy-in price going to come at? And is that a price in which I'm still able to achieve my multiples on the top side? And a lot of this for you will come down to, again, just simply how much you're going to get out of the projects. If you bought ICP at $3 and you want a 30 or 40x ICP, then yeah, I wouldn't fiddle around with this too much. But again, in this example with Render, if you say bought in at an average of $2 and you're looking to say 15x, well, yeah, Render's going to definitely, 15x even from an average buy-in price of $5. So in this case, you can definitely afford to do this, especially if you don't have any alternative projects to buy. So what you want to do is basically take the new expected average price you're looking to get out of. Again, this is a level in which you'll have to maximum look at that you want to get out, and then just divide that by how many multiples you're looking to get out of the project. So for this, it's $40 surrender divided by your multiple of 15 gives you $2.66. So what we're saying is we can bring our average up from $2 now to $2.66 and still achieve our goals by hitting that $40 price. So we're adding 66 cents on the top of this, but it's free gains. It doesn't work like, oh, if I buy up here at $10 and I buy at $2, I'm only 4xing my $10 price and I'm going to, let's say, 15x at $2 price. It doesn't work like that. They merge together, and ultimately when you sell at the very end, it's all going to compound in together. It's a very simple formula. So it's cost basis, how much you've invested into that project, divided by the amount of tokens you currently own. Now, if you're someone who doesn't already know your average buy-in price, it's a very simple math, right? You don't know what you've purchased Render at. So you take your cost basis. Again, this is how much money you've invested. If you've 6x your Render position and you have 60 grand, you don't use 60 grand. You use the $10,000, and then you divide that by the basically the number of tokens you currently have in your portfolio, okay? So very, very simple. You did the math on that. It comes to $2. $10,000 divided by 5,000 tokens. So quickly you can figure out what your average buy-in is for each of these projects and then start there. Then you can follow what I'm going to tell you now to see if maybe you can buy more of those tokens to have that risk-free upside. So again, let's work this out. It's a bit of a situation of trial and error. So $2.66 is what we know that we can get for our Render token. We don't know how much we're going to have to spend additional to the $10,000 we have invested, and we don't know how many Render tokens we're going to actually need. So here's why it's very important to use a really, really great platform that allows you to visualize this as you're going through. I use Caleb and Brown. The links are down below, of course. These guys are a crypto brokerage. And what I do before I buy is I plug in basically how much I think I'm going to have to spend. So let's just say $5,000. So I'm going from $10,000 to $15,000, and that's going to give me the actual amount of render tokens I'm going to buy with that much money, as you can see down here in blue. So what we're getting at is adding 5,000 on the top of the existing $10,000 cost basis, and then adding these 448 tokens on top of the existing 5,000. Doing that calculation right there, and that comes to $2.75. So we're a little bit over. Again, we're looking for $2.66. So we try again. Okay, again, throwing spaghetti at the wall. Let's try bring from 5,000 to 4,000. Works out to be this time 357 tokens. So we use those 357 tokens, add it to the 5,000, take the 4,000, add it to the 10,000, $2.61. So now we're a little bit under. And so, of course, usually it takes me about 3 goes, and this all can be done within 5 minutes. And I'm sure you math whizzes know a simple math equation to do this in one easy shot, but for me, it's been trial and error. Now I've just thrown $250 on top of the 4,000. We only need a little bit more, of course, to get to this point. Throw it on top, so 14,250. Then the 378.52 tokens or 53 tokens, add it to the 5,000. We get $2.65. So 1 cent off. I'm pretty happy with that. So that's how you do it. Trial and error. Again, you can go through there, and the way I would look at it is just simply using these positions that you averaged in pretty low or lower than what it might be right now on this dip to, again, just simply take off that additional risk of finding a new altcoin and having to jump in at what not might be an optimal price. Allow me to interrupt your viewing experience today to bring you an important word from this video sponsor, My Lovely Planet. Now, these guys are a mobile game looking to make a real impact in the world by allowing you to make money in crypto by playing their free game whilst also doing good for the environment. Now, here's the thing, guys. I get a lot of messages every single day. These guys spoke to me because, at least one of the many things, their team is absolutely stacked. Now, their team has had, 15 years of experience at Unity, for example. They've also worked at places like Ubisoft, and they've also been in one of the incubation rounds with Ubisoft themselves. And I believe 3 or 4 of these team members were actually part of the reason why Candy Crush is so addictive, right? They came from Candy Crush. Now, when you're talking about, obviously, an addictive game, I mean, my parents still bloody play Candy Crush to this day. So it's all about gamification. It's all about addictive nature. But here's the thing. This is where My Lovely Planet really breaks apart, and why I believe it aligns with my personal values is because these guys are focused on making the environment green. Essentially, what you do is, right, when you're in the game, you go through different games, and what you ultimately end up doing is planting trees. And every time you plant a tree in the game, they actually go and pay people to plant trees in real life. So when you're talking about actual impact and, making a change, well, apparently crypto is supposed to be this blood-sucking, energy, inefficient sort of software and hardware. Well, these guys are looking to actually make a change, right? Which is really good to see. Now, there are, of course, an additional benefits. First of all, the target market. We all know how big Web3 gaming is. And like I said, about 60 to 65% of that is mobile games, or at least the general gaming market. So this is a very big area, and everything is play to earn, right? Which is why they need this token. As I mentioned down here, it's energy green. MLC, which is their token, is built on the Polygon network. So of course it is energy efficient. And importantly, it is actually free to play. Now, as you can see here, their goal is to plant 1 billion trees, 1 million tons of plastic saved from the environment, and 40,000 endangered species they're planning to protect biodiversity. What I'm going to do is take you through the buy now process and what it's pretty much going to take to participate in the current ongoing sale of the token before, of course, they launch on their first centralized exchange very soon here. Now, it's important that you listen up because this sale is only going to be available up until April, and then of course it will launch at about 10 cents per token on those centralized exchanges. The first thing you're going to want to do is just simply press the link in the description and create an account. It is super easy to do. All you really have to do is enter your name, email address, and of course make sure you drop in the referral no BS crypto. And then simply what you want to do is just confirm that you're buying the token, of course, for the price that you think you are. Okay, right at the top over here, and then just press buy MLC. Now we're just going to have to run through the steps, of course. course, make sure you click the right country. Are you 18? Yes. General terms of the sell, make sure you read those. And I understand I'll have to verify my identity with a KYC to receive my lovely coin. So you will have to do KYC. Do not skip forward for this, and only to realize that you can't KYC or participate in your country. Choose payment method. Now, of course, you can choose a few different ones. You can even pay with your card, and I'd probably say BNB would be the best, but USDT, I believe you can still pay with this through Matic in BNB. Okay, so I'm going to paste in my address here. Then I'm going to put in my amount. So let's put in 1,000 USDT, and you can choose your vesting term. So up to 2 years, right down to 1 year. I'm probably going to say 1 year is good for me since, of course, well, I think the bull run might be ramping up by about then, and click buy now. So it's going to give you an address you have to send, of course, your tokens to. All right, so payment amount 1,000 USDT, got the equivalent over there in euros. And what we're going to do is now process that via MetaMask directly. So now that that's sent, you want to click into your activity over here on MetaMask where you went and sent that. Click it and then click copy transaction ID, and then I confirm I did the transfer, and then paste that in there. I confirm transaction hash. So we've pretty much copied the transaction hash in to prove to them, once I did, of course, a manual verification, that I did in fact send the tokens. Everything coincides. It's going to say to comply with regulation, participant will have to go through identity verification. So click view transaction, and it's got it all, and verify my identity. Once you verify your identity, I'll go ahead and do that now. You're all set, all sweet. It might take a little while to confirm, but you are all done. And if you're asking yourself, how do I know when the token is going to launch? Like, how do I keep my finger on the pulse? Well, of course, follow them on Twitter. All links will, of course, be via the website, as you can see at the top over here, and they have about 25,000 followers over there. Give them a follow. So thank you again to MLP for sponsoring this video, and guys, I really appreciate you watching this entire thing all the way through. I really appreciate it, and I really do hope that you have a very prosperous bull run. With that being said, talk to you soon. Bye.